What's up, guys? It's Cole. I wanted to basically go through my strategy in which I'm able to rinse prop firms mathematically. So I have over 90K now in total prop firm payouts. I believe about 70K of that is profit after the challenge fees, and I've been able to formulate a strategy to basically conquer these props in a mathematical way that makes complete sense once you actually start firing the numbers out, right? So let's go and look at the four things that actually matter when you're purchasing a challenge. So the number one thing, right, drawdown to breach. This is fundamentally how much drawdown you have on any given funded account before you breach the account, right? On most accounts that are 50Ks, it's 2,000, 150Ks are 4,500, etc., right? That's pretty standard, pretty easy to understand. The profit to pass is basically how much profit you have to make in order to pass the account. This is extremely important, and the drawdown to breach as well as the profit to pass, the ratio in which that creates is extremely important to understand how easy it is to pass an account, right? So third, we have consistency rules. That is basically how many days and what percentage per day you can get in order to pass or take a payout, right? So this is for both the challenge phase and the funded phase. This is very important to understand because, you don't want to, if you're trading a high risk strategy to where you might be able to make 60 to 70% of your total profits for a payout in one day or to pass the account in one day, this is something that you really have to look out for. And then also the payout rules, obviously. What percentage they're going to give you, how much can you take out? Is it half the account? Is it any given number that they give? It's very variant, right? And it depends on the firm. But yeah, those are the four main things that you have to look at. There's tiny little other things, such as, obviously like past history, right? Like you don't want a firm that's like scamming people. You have to look at a couple other different rules, like with news trading, if you incorporate news trading into it. But these are the main things that you have to look at when you're looking at how to mathematically conquer the props. So over here, I am basically explaining to you, dependent upon your win rate, what percentage of your account you should be risking per trade. Now, me personally, right, this is my funded numbers, not my challenge numbers. My challenge numbers, I risk extremely high amounts. Why? Because spending time on challenges when you have a decent nest egg saved up in order to purchase more of them is a complete waste of your time and is probably costing you a fuck ton of money, realistically. I think that a lot of people spend way too much time on challenges. Like if you're spending 2-3 weeks, I have friends that have spent months on one challenge. What the fuck are you doing? You're like brain dead, bro. Like your brain has been captured by fucking aliens and they're crumbing on your shit like it's a feast, bro. Like you are a buffoon if you are taking $100 of risk on a 2K drawdown on a challenge, right? This is on the funded stage. So all these win rates are incorporating that you have at least a 1-to-1 RR. Obviously, if you have a 30% win rate, you're going to want to have a large RR because you have to make up for that win rate loss, right? So that's probably like a 1-to-4, maybe 1-to-5, 1-to-6, and higher. 40%, 1-to-2 is profitable, right? I have about a 1-to-2.1 risk to reward ratio on average. So, and my win rate is about 48%, right? So I actually categorize myself in the 50% win rate category. That is that I trade 1/10 of the account value per trade. Now, why is this, right? You want to make it mathematically difficult, not impossible, right? Because it's virtually impossible to make blowing an account impossible, but you want to make it mathematically difficult and unlikely, right? So if I have a 50% win rate, what I'm doing when I'm risking 1/10 of my account is I'm flipping a coin like over and over and over again. Heads, I make $2. Tails, I lose $1. And that's with a 2-to-1 risk to reward, right? The chance of you losing 10 coin flips in a row is extremely low, right? We can go to the actual statistical numbers, the mathematics behind it, but the standard is that it's difficult to lose 10 coin flips in a row, right? Imagine you are playing blackjack, right? I'm sure you guys have heard of, what's the one where you double your bet every single time, right? And you have to lose a ridiculous amount in a row in order to blow the account. It's similar to this way, but you keep a standard bet and the bet goes again and again and again and again and again, and your win is higher than your loss, right? That is where the edge comes from. Now, if you have a 60% win rate, you want to risk about 1/8 of the account per trade. And if you have a 70 to 80 to 90% win rate, you're a fucking liar. You do not have that. It is fundamentally impossible to have a 80% win rate unless you have maybe a 0.5 RR or something ridiculous, right? Your edge is going to be minuscule, right? Not there, right? Your edge is possible to obtain, but it's still like, come on, bro. You don't, like, any fucking person that's telling you that they have an 85% win rate with a 7 to 1 RR, take a stake and shove it right through their fucking head so they can't speak again, because they are an idiot. They are trying to sell you something. They are trying to profit off of you, right? So here are some notes that I have on props that I think is super, super good for you guys to look at. So number one, 50Ks on most firms have a lower price to ease of pass ratio, so you should usually buy them. This goes for basically any of the major firms, right? The 50Ks, it'll be on average 2K drawdown and 3K profit, right? And as opposed to the 150K, which is a 4,500 drawdown or a 9K profit, or a 5K drawdown and a 9K profit. Obviously, right, if you have 2K drawdown and 3K profit, it's way easier to pass than a 5K to 9K. The ratio is simply bigger, right? You have more drawdown compared to the profit needed. That makes the 50Ks usually a better buy. Now, obviously, with certain firms, they standardize the ratio across all the different accounts, which is, in my opinion, the smart way to do it. But on most firms, the 50Ks and the lower amount accounts are simply just worth more money. Avoid unrealized drawdown. Super obvious. Creates unnecessary mathematical variance and dilutes the possibility of a payout. This is obvious, right? Apex, it's like that one video of Illuminati where he's like, Rob, or whatever the hell he said his name was, and he's like, you are one of the most trash hoopers in the nation. Apex, you are the most trash firm in the country, bruh. Trash firm in the country, bruh. You are awful. Like, anything with unrealized drawdown, they are scamming you. They are simply putting in a rule that is making it so much more difficult in order for you to pass. Do not, I repeat, do not trade any of those kinds of firms. Number 3, do not put all of your eggs in one basket. What does this mean? This means if I have a bunch of Mossad step accounts, we'll talk about that later. If I have a bunch of Mossad step accounts, and I also have Alpha accounts, and I also have Funded Next accounts, and I also have Tradeify accounts, what am I doing? I'm diversifying my asset pool, right? These firms can go up tomorrow, realistically, right? It's 100% possible and plausible even that they will eventually shut down. A lot of them are illiquid. A lot of them are living off debt. I mean, you look at some of their books, it's horrendous, right? I've looked at extreme examples of firms just blowing up because they offer too low prices and they are cooked. They're fried, right? So try to diversify the amount of firms that you have. Don't try to constantly firm hop, like try to max out a firm and then move to a new firm. But don't just only worry about one firm. You want to diversify the amount of firms that you're in. Number 4, these props are not your friend. They are consistently trying to undermine your profitability. Do not give them the benefit of the doubt. What does that mean? If they have some weird day where their platform shuts down or they're unable to do something, and then they give you some bullshit reasoning, right? Some straight hogwash, dog-ass reasoning as to why your profits got deleted or something like that, understand that they are not your friend, okay? When you understand that the prop's not your friend, you are able to put in more support tickets, make sure that you get that damn payout, threaten litigation, do whatever you have to do in order to get what is yours, what they promised you, right? These firms are trying to screw you, right? It's the same as brokers. It's the same as a lot of gurus. They're trying to screw you out of your money. You have to realize that, and you are able to make better decisions based upon that. Number 5, the final note, scale viciously, okay? Do not take the profits and go spend it on a fucking Lamborghini Urus, Miami Toyota, right, for 2 days so you can impress some 7 out of 10 girls with 58 bodies that they got at the University of Miami or wherever the hell you live. Right? It is absolutely abysmal the amount of people that I know that get a payout, spend it on dumb shit, and then blow their accounts. It is insane. You need to scale and scale fast, right? The more capital you have to trade, trading is a capital game, right? It's not a game of edge, right? Edges exist, but it's about the amount of capital you're pushing into that edge, right? It has nothing to do, like a 10% edge on 50K is way different than a 2% edge on 100 million, right? This is why hedge funds are such a profitable business. It's not because of their massive edge. A lot of these hedge funds have, 8% a year returns, 10% a year returns, which is abysmal, right? If you understand the markets, you understand how to generate leverage. Even with large slippage in like high volume areas, like, you're trading $100 million volume at a time, you can generate an edge, right? But they mitigate their risk in order to standardize their profits, right? You do not have that luxury. You are broke. You need to make some goddamn money. Let's make the money on the firms. That's all the notes for now. Okay, now let me explain the two types of styles that I like to trade. This is the aggro turnover and the rise and grind. Okay, the aggro turnover is basically, I'm gonna blow these accounts eventually, but I'm gonna get a shit ton of profits and a lot of payouts before I do that. Right? That's the way that I treated Top Step for years, right? Like 2 years, I was just constantly just turnover, buy more, turnover, buy more, turnover, buy more, right? And that can work like 100%. It is a genuine strategy that can 100% work, but you have to be ready to accrue costs. You have to be ready to accrue risk. You have to be okay with risk. You need to have good psych. That is a difficult thing to do, right? I still think you should limit the amount of trades that you take a day to maybe 2 or 3, but you can aggro risk, risking $500, $400 on a 50K, something that where you are taking on a lot of risk and you expect to blow some accounts, right? But yeah, that's one strategy that I used for a while. But nowadays, I like to do the rise and grind strategy. The rise and grind strategy. The rise. Shout out Bonkonomics, my boy. Wake up, take a trade, get the fuck off the charts. Wake up, take a trade, get the fuck off the charts. What happens on a day-to-day basis does not matter, right? If you are getting on and you are betting $200 per trade, right, on a 2K drawdown account, and you have a 50% win rate, you can lose 4 in a row. Who cares? You're not going to lose another 6 in a row, right? The chance of that happening is less than 5%. So take that trade, get that profit, take the overall payouts. 1K over 7 accounts is 7K. You can make that in a week, risking 200, right? If you do the math, let's say you win 3 days on a 2-to-1 risk to reward ratio. You win 3 days, how much profit is that? 1,200. You lose 2, that's 400 loss. 800 profit per account across, let's say, 7 accounts, 10 accounts. That's where the real money is. It's in the scaling, right? That is the strategy that will take you long term, right? Where you have a bunch of accounts that you risk minuscule amounts on, taking 1, maximum 2 trades a day, and you simply scale. Now, finally, I want to talk to you about the best firms in my opinion. Now, and first, you have Alpha. Alpha Futures, truly, in my opinion, is the best firm out right now. Will that change soon? Probably. Right? They did some weird stuff with like limiting contracts with like gold and silver recently, which is, I think, stupid as shit. But they right now have the best accounts. So their best accounts are advanced or zeros. Advanced, if you want to do turnovers, right? You want to buy accounts, try to flip them, get a fucking huge payout, and then blow it, right? That's the advanced. Or the zeros. The zeros are the rise and grind accounts. You wake up, risk $200, stop. Right? That is dependent on whatever strategy you are taking, right? The second best, in my opinion, are the funded next accounts. I think the rapids are probably the best. You can do the legacies, but I think the rapids are probably the best. That is really the bread and butter of the firm. I think it's the best, and you should 100% be buying the 25Ks. They're $90. They are the best value, and they are amazing, right? Third, Tradeify. They're a good firm. I've got a payout with them before, and you should be buying the growth accounts. Pretty simple. And buy their 50Ks. Their 50Ks are the best standard accounts. Now, where is Top Step? Where where is it? Oh, what's that song? It's like na 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 hava nagila hava. Top Step is the worst firm of recent history. They are constantly pushing updates to make their firm worse. They are constantly pushing updates to ruin their publicity and ruin their firm. Get off of this firm as fast as possible. They are forcing you to use TopStep X, which is a gamified platform that will ruin your trading. Get off TopStep as soon as possible. Stop buying accounts with them. Okay? Now, that's basically all I have for here, right? But you're like, Cole, why the fuck is a picture of Kanye West up here, right? Why is my glorious king up here, right? And the reason why is I wanted to add a little bit of a motivation section to you guys to help you really drill home what this is all about, right? What is trading all about? Trading is about freedom. Okay, trading is about the ability to make your own choices, the ability to wake up in the morning and not have to answer to anybody, right? That's why I do it. That's why I want to do it long term. Asset management is amazing, right? No corporate LinkedIn bullshit, not submitting applications to people that don't care about you, not asking for paid sick leave, nothing, right? Kanye West has a quote, right? I believe it was originally a Henry Ford quote, but it says there's two types of people in this world. There are people who say they can't and people who say they can, and they are both right. It is an incredibly genius quote that completely symbolizes everything that I stand for, right? You have to believe in yourself. Like, even if it doesn't make sense, even if it doesn't make sense to believe in yourself, you have to believe in yourself, right? These props are beatable. There are people making hundreds of thousands of dollars a year simply from prop firms, right? I know one person that has made over $1 million in profit from props in the last year. One of the best traders on all the firms. He's an incredibly profitable trader. You guys can do this, okay? You have to think that you can and not think that you can't. Thank you, Mr. West, Mr. I'm always with the fresh, whatever the fuck he said. But yeah, that is how I rinse props. If you guys want, you can join my Discord, link in the bio. We go over a bunch of different strategies, a lot of different mathematical terms, and I explain everything about how I rinse these props and how I trade profitably. See you guys later. Catch it.